G'day and welcome to the Global View on this Friday. I'm Andrew Gagan. Great you could join us here at Ausbiz. Let's take a look at what happened overnight. Global equities mostly higher while the US dollar and Treasury yields gained. This after the United States outlined a trade deal with the UK, prompting market optimism that other deals can be made. However, blue chip stocks closed lower in London, even as the Bank of England cut interest rates. Well, the US share market outperformed, with investors welcoming a new trade agreement, as President Trump flagged talks with China this weekend would be more substantial than initially thought. Airline stocks gained, with the US-UK agreement exempting plane parts made by Rolls-Royce from tariffs. Delta Airlines among the best performers. US Commerce Secretary Howard Lutnick said the UK would buy $10 billion of Boeing aircraft, sending its shares higher. Elsewhere, US-listed shares of ARM slumped after the chipmaker forecast first quarter revenue and profit below Wall Street estimates. And Warner Brothers Discovery shares surged on reports that it's moving towards a potential breakup. This after it missed first quarter revenue estimates and posted a larger than expected loss. Tapestry rose after the luxury group raised its annual forecast, while Krispy Kreme shares cratered after the restaurant chain became the latest to withdraw its full-year guidance. Well, the agreement between President Trump and British Prime Minister Keir Starmer amounts to a limited bilateral trade deal where the 10% tariffs on British exports will remain in place, while modestly expanding agricultural access for both countries and lower duties on British car exports. The US will cut tariffs on British cars to 10% from the current 27.5%, which will apply to a quota of 100,000 British vehicles. And tariffs on British steel will fall to zero from 25%. Well, both sides have agreed to new reciprocal market access on beef. And President Trump said that Britain made a good deal and that many other trading partners may end up with much higher final tariffs because of their large US trade surpluses. Meanwhile, the Bank of England has cut its policy rate by 25 basis points to 4.25%, as widely expected, with its statement seen as hawkish, emphasising that additional easing should be gradual and careful. And both Norway and Sweden's central banks held their rates steady. US Treasury yields touched multi-week highs as the US-UK trade deal spurred optimism that similar agreements will be struck. The US two-year Treasury yield rising at 3.9%, the 10-year up to 4.38%. And the US dollar index was up more than 1%, gaining against the safe haven yen and Swiss franc, while the British pound fell slightly in the wake of the rate cut. And the Aussie is back down to 64 US cents. And Bitcoin surging past the $100,000 mark, now above 103,000 in fact. It's moved above that key level for the first time since February, fueled by expectations of easing global trade tensions. Well, that's also seen oil prices jump on enthusiasm over trade deals. The Brent crude futures up almost 3% at $62 a barrel. However, copper has fallen more than 1%, iron ore down almost 2% at $98 a tonne, and the appetite for risk assets has seen gold extend losses, slipping more than 1.5% to $3,307 an ounce. Well, for a reaction to that proposed deal between the UK and the US, and also the Bank of England decision to cut rates, I caught up with Fiona Cincotta from StoneX.
I think this is more of an initial agreement rather than any full-fledged trade deal, but still it's a step in the right direction. And if we think about the UK since Brexit, it has been keen to get some sort of deal going with the US. So again, this does feel like a step in the right direction. I mean, as far as what it really involves, we're looking at industrials, chemicals, cars. This is sort of the areas that are going to be benefiting. We've had the steel and aluminium tariffs removed. Also, the car tariffs were reduced to 10%. That's down from the 27.5% that they were at. Also, tariffs removed on US beef. There has been a little bit of an issue as far as the standard of US food coming into the UK, but apparently that will be remaining at the standards that it is. There are a couple of areas that we still don't know much about, and I think there are more details to be coming at some point. But pharmaceuticals, that's an area that's still very much under the spotlight And still we don't really know what's going on with that. But again, sort of as far as the big winners are concerned here, I mean, Rolls-Royce, for example, they're trading up 3.6% higher. They're allowed to enter the US market without tariffs. Also, certain UK airlines, well, they haven't been named which one, will be able to purchase Boeing planes without taxes as well. So this is definitely good news, step in the right direction. That wasn't necessarily reflected in the end of the FTSE 100 or the pound, which both actually traded down on the day, though.
Yeah, why was that particularly? And we'll get to this, given the Bank of England has cut again.
Yeah, that's right. So, I mean, the Bank of England did cut interest rates, and in line with expectations, down 25 basis points to 4.25%. This is the fourth rate cut that we've had from the Bank of England, but it was more hawkish, the rate cut, than what we were expecting. That's because of the vote. The vote showed us that it was a 7-2 vote, seven policymakers voting to cut rates, two voting to keep rates on hold. And that's where the surprise was, because we were expecting 9-0. Now, the fact that those two voted to keep on hold overshadowed the fact that even within that seven, two of those seven actually voted for larger rate cuts of 50 basis points. So also when we look at the statement I think was a little bit more hawkish than what we'd been expecting. We had been potentially expecting the Bank of England to remove reference to careful rate cuts. So they'd been referencing gradual and careful rate cuts. We're expecting a potential removal of that word careful. That didn't happen. So the reason that we've been expecting that is because of the potential impact of trade tariffs on global growth and therefore on the UK economy. But I think the Bank of England, what they're looking at right now is potentially pretty similar to the Federal Reserve in some respects, is the fact that the hard data still isn't showing any deterioration. So we've seen sort of, softer figures coming in, softer data has hinted towards weakness, but the hard data isn't showing that yet. In fact, the Bank of England increased their growth forecasts for 2025 to 1%, although they did lower their forecast for 2026. But coming back to your question of why the pound actually fell, so the pound did fall not because of the rate cut. It actually rose after the Bank of England interest rate decision. But then this announcement with the trade tariffs pulled the pound lower against the US dollar because it boosted the dollar. This is hopes that the US dollar is going to be on firmer ground because we're sort of moving towards trade deal agreements for the US. So that's just that unwinding of the Sell America trade, which had really impacted the dollar across the last month.
Overall, Fiona, I know that UK asset prices, well, the performance over the past certainly decade has underperformed relative to global markets. What are you seeing? Any noticeable inflows of capital, particularly from the US at the moment? Are investors seeing opportunity in the UK?
Yeah, I think, if we have a look at the recovery in the UK compared to what we'd seen in the US from those April lows, we had seen a stronger recovery in the UK. But I think there are still pockets of weakness that I think are causing concern for investors. Obviously, the UK, the FTSE 100 is very much resource heavy in the sense that we have the heavyweight miners, we also have the heavyweight oil majors, and they are very dependent on what's going on in China. Now, obviously, there have been concerns about the growth, the economic outlook in China slowing. And that was even before we had the Trump trade war kick off. So I think the outlook for UK, the FTSE 100 remains relatively weak in comparison to the DAX, for example, or its other European counterparts, and that's just because of the reliance that we have there on the Chinese economy, but also the fact that we just lack the tech stocks in the FTSE 100. So that's something that's been very noticeable over the past few years. Those asset reallocations from the US, I think, have been much more evident if we look at the DAX, which is, just trading shy of all-time highs.
Now, Fiona, speaking of China, of course, those talks due to take place between Chinese and American trade officials in Switzerland this weekend. Are there any great expectations there? Certainly Donald Trump talking it up, of course.
Yeah, he loves to talk things up. But no, I think the idea here is to go in with a fairly low bar of expectations. These, I think, we really are looking at them as icebreaker sort of talks, literally the first step in what could be really quite a long process in trying to organize a trade deal between the US and China. So, I think as long as we're not expecting too much, and I would like to say that, from where we're standing, expectations are low. Literally laying the groundwork for another meeting, I think, is the best that we can expect.
And Fiona, any development as far as possible talks between the EU and the Trump administration?
That seems to be a more sticky situation than between the UK and the US. Obviously, I think, Trump has on numerous occasions highlighted the trade deficit between Europe and the US. So they're not expected to have as an easy ride potentially as the UK, given that our trade balance is fairly balanced with the US. So there hasn't really been too much progress that has been cited. In fact, I'd say quite the opposite. It feels like, there hasn't been much progress at all. But the time, the clock is ticking, and there was only a 3-month extension to these sort of strong Liberation Day trade tariffs that Trump applied. So we would be expecting to hear more from trade delegations in the coming days and weeks.
Fiona Cincotta from StoneX. Let's turn to the local market as we anticipate what's going to happen in today's session. Looking for a flat opening there, essentially, with SPI futures off just by 2 points. So stay with us. We're going to go right across the open in just a couple of minutes' time.